You're listening to the Military Millionaire Podcast, a show about real estate investing for the working class. Stay tuned as we explore ways to help you improve your finances, build wealth through real estate, and become a person that is worth knowing.
What's up, guys? Today I wanted to stop and sponsor my own podcast by myself, which is a little cheesy, to tell you about the course that I'm launching called From Zero to One, Real Estate Investing for Beginners. Now, this is not a course to help you get rich fast. This is not a course to promise you to make $1 bajillion, but this is the course that will help you get from 0 rental properties to 1 rental property. It is designed to get you through your first purchase. Everything you need to know to get you through that step, with support from myself, obviously, via email and whatever, so that we can talk and I can help answer some of those questions for you. And it is extremely affordable right now because I'm launching it for only $97, which, given the amount of content in there and the testimonials I got from the people who tested it beforehand, I am super on the low end for that price, but I'm going to probably have to bump it up in a little while. But for now, to test the waters and see exactly how many people I'm able to help with this, I want it to be extremely affordable because I want to help service members and veterans get their feet in the water. So if you are interested in learning about rental properties and you just want to learn how to get your first one, and then there are some bonus episodes in there to help you advance past that. But if you really just want to know everything you need to know to buy your first property without screwing yourself over, this is the course for you. Go ahead and check it out. The link will be down below in the show notes. And back to your episode.
What's up, military millionaires? How are you today? This is going to be a fun episode. So we have Jeremy Hands, whose name I have mispronounced for, ever since I met him now in my head, who is a Nighthawk pilot for the Navy, who's done active duty. Now he's in the reserves doing, I believe, IMA, right? And anyway, so he's a Nighthawk pilot, flies helicopters around, living life, but he's also a commercial real estate guy. So he's done a lot of deals, and he's just a really cool dude. So he's in the mastermind group with us, and we talk all the time. And I've been bugging him for a couple weeks now, and I also stood him up once when we had a podcast scheduled, and I slept through it. So we are back to do it again. And Jeremy, welcome to the show, buddy.
Thanks for having me.
Yeah, tell us a little bit about just yourself and where you got started.
Yeah, so Jeremy Hands, I grew up in Nebraska and Texas, graduated, got an ROTC scholarship, University of Oklahoma. Nothing really magic there, got a degree in communication. Joined the Navy, kind of wanted to fly helicopters from the beginning. Was blessed enough to go to flight school, select helicopters, and then got San Diego flying the MH-60, really off the carrier John C Stennis for a couple of years. Great time out there. In that process, right, it's kind of where I started my real estate, and really even before that. Right after I graduated, the military officers had the opportunity to get a career starter loan. And so I got both the USAA and the Navy Federal career starter loan, which I don't think you're supposed to do, but one of my superpowers is reading fine print. And so I found the way to do it. And so as a 22-year-old, I had $55,000 in debt, and took all that money in late 2007, invested all in individual stocks in the stock market, and then to watch 2008, 2009 happen. And I successfully turned $55,000 into $15,000. I had nothing to show for it but a $1,000 a month loan payment. So that was kind of my kickstart to the world. And that's when I realized maybe I'm not as smart as I think I am, and started looking at other options. So wife and I moved out, got married. Wife and I moved out to San Diego. We spent about a year trying to find something where we could live in it, and then rent out the other units. And so we were looking for a duplex, triplex, or quad. Man, crazy market out there. I think we had one offer that was $100,000 over asking, didn't get accepted. We had the highest offer that didn't get accepted. We had one property out there where our offer had been accepted, and then they accepted another offer at the same price, and then told us to work it out, like get in a sandbox and fight over it. So that didn't work out either. But we finally found a place out there. It's got a fourplex back in 2010. Way too much money, right, for a 23, 24-year-old with a wife, but worked out really well. Did the FHA loan out there. So did that. Flying in the Navy, wasn't expecting to make real estate anything other than, hey, just something I own. The Navy then decided to move me to Pensacola, Florida. So I now live in Pensacola, Florida. Been out here now 7 years. Came out here as just a married guy, hanging out, going out. And now I have 3 kids, and I talk about my grass and my grill. So had a change in lifestyle here the last few years. But when I got out here, got more into the commercial real estate when I saw how well that fourplex was doing. So continued in real estate, but I never bought a house. So I got out here, bought a mobile home park with a partner, bought a sixplex, started investing passively in syndications across the United States. And really, it wasn't until I owned, I don't know how many units before I bought the first house I live in here. So I did a little bit backwards than everybody else. And then since then, I've just continued to kind of take what I called a hobby at the beginning to kind of a part-time job, side gig. 2017, my commitment was up for the military. And by that point, in the 3 or 4 years I'd kind of really been focusing on real estate, I had enough to go ahead and kind of step off active duty and go work for myself. Still playing the reserves, more or less full-time right now, which is kind of cool. And then commercial real estate on the side, now syndicating apartment complexes, mobile home parks, and RV parks. Is that enough? I don't know.
I feel like that's enough. I also love that you led with your success in 2007. I think that's cool.
Yeah. So, you know, I think a lot of people are like ashamed of that stuff, but that $50,000 loss is probably the cheapest education I could have gotten on not being an idiot in the stock market. Because I think it's just as likely I would have done the same thing at some point in my future when I was playing with, you know, 6 figures or 7 figures and lost it all. So, yeah, it hurt. And I paid the price for 4 years every month paying that loan payment, but it's worked out.
Dude, everybody needs to learn. Well, first off, everybody needs to learn that what you said, the most important thing you said, at least to me, was I'm not as smart as I thought I was, which I think is people, especially people who are entrepreneurial, I think are prone to thinking that they're smarter than, especially, you know what, if you are actually smarter than your peers, you might think that you're smarter than you actually are, which is what gets you in trouble. You're like, oh, I'm smarter than my social group. I can't lose. It's like, yeah, you still can. The world's big. And paying for that education up front is good because somebody hit me yesterday, like, I want to buy houses, but I don't want to lose any money. And I'm like, well, then you're playing the wrong game because you're going to lose eventually. And the faster you can do it up front and learn that, really, not just hear it, because you can hear it all day long, but you got to feel it. You're like, oh, I messed this up. That's a humbling experience. But that's how you really learn. Well, one, I'm okay with losing money. And two, maybe I won't do it so frivolously next time. Get in debt to buy stocks has got to be the dumbest thing, and I'm so glad that you opened with it.
Here's the kicker. People always say, I've heard it before, why didn't you just hold on? If you would have held on for 4 or 5 years, that it would all come back. No, because I didn't buy the market. I bought individual stocks, and like 3 of my 10 companies went out of business, right? I had great ideas. It wasn't like my investment criteria was wrong, but I'm not in control of that company. I'm not in control of the greater market. I'm not in control of the economy. And so, yeah, I knew that healthcare was going to go digitized, but it didn't go fast enough for me to make any money in 2008, 2009. So,
you know what, let me ask you this, actually. If you had taken that same strategy and won, do you think that makes people worse? Meaning, do you think people that get too easy of wins too early in their career, they actually get more arrogant and take on worse risks in the long run? I know it's like an anecdotal statement, but in my experience, it's like if you take those wins early, you get too cocky, not too.
So here's what happened, right? I graduated in 2007 from the University of Oklahoma. In 2005 and 2006, I saw buddies taking these loans and going to investing in 2005, 2006, and they were able to, 50%, 100%, double their money kind of thing. And they were buying Mercedes and trucks, right? And so it seemed like this is a plug and play. If you do it, you make enough money, you buy a cool car, right? Life is good. If that had succeeded, I 100% believe, one, I'd have a job right now. I'd not be in real estate. And yeah, I might have had a cool car for a few years, but I would have learned nothing from it. So,
what I'm getting out of this is that we should all take out HELOCs and go invest in the sure thing that is Tesla right now, because who doesn't want to buy 375 price to earnings ratio?
Yeah, I feel very confident.
What could possibly go wrong?
We're going to have this same conversation with a young kid who's on Robinhood right now, buying Tesla or buying something else on margin in a few years when they realize, holy cow, I just got hosed. So,
I know I've been debating.
Do I still invest in the stock market? Yes. Did I change all of my investment strategies? Yes. Right. So I still have a pretty healthy net worth in the stock market. But I don't, owning a broad-based index fund is much easier to sleep at night and not have to go check every day. My wife used to make fun of me and grill me, and she's like, stop checking how much money are you losing today, right? But and I couldn't help myself there for a few years.
So that's, and then we can get transition into the fun stuff, but the stock market. So I've played it, I've won, I've lost, whatever, we've all played. So with when the virus hit and it crashed, I put, $3,000 into like 3 companies that I was like, yeah, these will bounce back. And I made a great return, right? Like whatever. It wasn't a ton of money. It was just gambling. It was literally like a check I didn't know I had coming in the mail. And I was like, yeah, I'm going to gamble with this and see what happens. And I made, I don't know, 40%, 50%, like 2 weeks. Like it was great, right? It was easy. What I forgot about the stock market when you do individual stuff like that, instead of my index funds, my TSP and whatever, is that, yeah, even if it's going well, I'm checking all the time. I'm stressed. I'm worried. I'm looking. With real estate, I buy a house and I'm like, here you go, manager. Let me know if you need anything, or I've got the system, or like, I don't like feeling like I'm chained to looking at what might happen to my investment through someone else's actions. Even if I'm winning, I know Alex rolls his eyes, but like I don't.
But
I don't like, I just, there's a system with real estate and I know like there's still stuff that can go wrong, but at least I can sleep at night. I don't feel the urge to look at it every 10 minutes.
Mm-hmm.
And even if I'm not going to make 40% in 2 weeks through a rental property, I would rather make money that way.
Yeah. You have to get over the emotional addiction to watching those stocks, but I don't, but the upside's much higher, right? So it's like, but that stock, especially right now, I don't know if you know that, but you can't lose as long as the Federal Reserve is doing what it does. So stock market's is good right now, baby.
Yeah. All to say though, I invest in the stock market. It is not my primary investment goal anymore. It is a pretty small percentage of my overall net worth at this point, but yeah.
What's the big play now?
So the big play now is basically apartments and mobile home parks. And then my little secret right now is I'm buying RV parks. So before it's cool, what is it? July 2020, putting my flag down, I started the trend, right? So, my first fourplex in 2010 was kind of pre me ever finding BP. It was well before ever the Bigger Pockets podcast had started. And so I was burring and I was house hacking before burring and house hacking were even words. So I try to go be contrarian and find cool things to do before they're cool things, and then I try to get out when everybody else wants to do the same thing. Not to say that they're not vital; it's just trying to stay ahead of some stuff.
Smart.
I like it. I think the RV park is. I don't know if you want to get into that, but I think that's a good idea. The van life movement is going to grow, especially after this. Whatever's going to happen with this economy, it's gonna plummet at some point in some fashion. And I think just like in 2008, right? Like people go, oh, the millennials don't want to buy houses because they saw their parents lose their houses. It's like, yeah, you're going to see something similar with that as well. And people are going to go to this minimalist lifestyle. They're going to move out of cities in many cases, not all, but many cases. They're going to move out of cities with video teleconference working. You're able to get a lot more mobile. And I think RV life is going to pick up. People are going to want to live in a. I'm thinking about it, right? Like I'm on van life on Reddit, looking at these people. I'm like, yo, that's dope. Just me and my dog. We'll drive up and down the East Coast. We'll go to national parks. We'll live a little bit more nomadic lifestyle. So I don't know that it's going to become super mega mainstream, but but as far as popularity increases, I think that's a valid strategy.
So let me give you 2 things there, right? So I think the thing that I have found the most, and I think all of us who are in the military, even if you're young enlisted, you have no money and you have a negative net worth, you are surrounded by people who are not the same as the average American, right? Socioeconomically, right? Even as a brand new boot coming out of boot camp, you have medical that's backing you up, right? There's always going to be food to eat. There's a steady paycheck, right? Things are going well. If you look across the United States, right, we're pretty top of the pyramid when it comes to kind of financial resources. There's a lot of this country that is definitely not in that same spot, right? And so when most of us are talking, when me and my peers talk about real estate, we're often talking about kind of housing people like us, right? But there's a whole nother level that still needs housing. And a lot of people don't want to deal with it, right? It's stuff they don't want to talk about, they don't want to acknowledge. But if you are that person that is working at a minimum wage job or at a retail big box store or a fast food restaurant, and you want to live on your own, you don't have a lot of options, right? And so maybe 30 years ago, mobile home parks were a big option. Mobile home parks are still an option, but they're decreasing so fast in how many are still available, and are not making the homes for parks anymore, right? Most of the mobile home park manufacturers are really selling these homes that are kind of built to be put out on land. Not to say they're not doing it, it's just there's not making many of them. And so if you have a tight financial situation, you're looking for apartments that you can afford, you're looking to have to live with roommates, or you're going to have to go find something else. And that's something else that I'm seeing over and over again right now in our parks is people are buying RVs and they're living in RVs as a long-term living solution, similar to like a mobile home park, right? And have their community and have their RV, but it's not like they're traveling, right? They might be in the same spot for years and years and years, but there are not very many in most markets long-term RV parking spots. And so, we're buying some of these campgrounds that are kind of, minimally amenity. They're not super high end. And we're just saying, hey, we're going to move over from doing like, nightly leases to, 6 month to 12-month leases. And we turn these into kind of mini RV park, mini mobile home RV parks, providing a service these people desperately want. And we have a list a mile long of people looking to move in because there's just not enough places for people to go. So, if people don't pay, that sucks. It happens. You still have to evict them because now you have a lease. But if somebody's not paying, they also have to realize I literally have 15 people on the list wanting to come move in here because everybody's looking for a place to park. So I kind of see it as a pretty untapped niche at this point that I'm pretty excited to plow into the next few years.
I looked very heavily into buying an RV when I came out here to San Diego this time because I was going to geo-bachelor. So I was like, dude, I would love to just live it up. I was going to buy an RV in Missouri, drive it out here, park on base. Ultimately what it came down to was two things. One, I realized when the family visited that wasn't going to be quite ideal, and then the internet piece. But so two, the way the base works here, the rates are great, but you have to move every 2 weeks. So it was going to be like, okay, well, I'm close to my office for 2 weeks, then I'm 40 minutes away for 2 weeks, then I'm off base paying 3 times as much for 2 weeks, then I'm back. And so it wasn't quite as convenient as I thought it was going to be, but I still, like, my roommate will tell you that we had this conversation like 2 days ago. I'm like, oh man, van life. Like, what if I can send all my stuff back to Missouri like 3 months early and I can find a cheap van on Craigslist that even if it cost me $5,000, it's still cheaper than 3 months rent. So I could buy this van. And there's like, even from not all the practical reasons, from just like a dude who wants to do stuff outside perspective, like, it seems like it'd be fun for even just a few months, let alone. So I think it's definitely trending.
Yeah, for sure. And I don't know if you guys saw, but during coronavirus, the one product that I know that outsold itself year over year from anything else was RVs. At one point, my business partner was looking to buy an RV because he wanted to Airbnb it in one of our parks, and he was not finding but like 6 available used RVs across a couple 100-mile swath because they'd just been snapped up March, April, May kind of time frame. Everybody wants to go travel by themselves. So
that's awesome.
Cool little
trend. You guys are pumping me up. I'm gonna go buy an RV now. Just trend. I want to be ahead of the trend. Yeah. Buy a pink one.
You just buy an old school bus and paint it pink.
Yeah.
Yeah. Well, I'm a little too bougie for that. Okay?
Short bus.
We need a shower in there. It's got to have.
So I gave you my hot tip. Do you guys want to hear how else I sucked at this before? Because I feel like anytime I listen to a podcast and I hear somebody else tell me how they screwed it up, I'm like, at least I learned something. I feel like I have enough of those. But
I would love to hear some of those.
Okay, so I have 2, right? So I bought a 6plex. So first getting started in commercial real estate, I knew I wanted to buy more than 5 units. I think if you click around on the internet, you read forums, everybody tells you, hey, I'm looking for a multi. I want to get that commercial experience. So I went and found that, right? Met a couple from the local RIA that was selling a 6plex. I went and looked at it. It was rough. And I said, no, I'm not interested, right? They wanted too much money. And then 6 to 9 months later, they've been kind of hounding me, talking about it every time we're at the deal. And he finally said, hey, look, we're about to just get rid of this thing on the market, just selling it way lower than they originally were asking. I said, okay, I'll go take a look. So went and looked at it, brought a property manager with me to kind of do the inspection with me as I went through it. Not a guy that I had a relationship with, but I thought maybe would take it on. We walked it all. I believe his comments to me was, hey, this looks like it could be a really good deal, but I had no desire to be part of it. I said, oh, okay. So about the 6plex, owner financing, I knew that due to my job, I wasn't going to be able to be available day to day. So I brought in a partner who didn't bring any money, but he was going to be the management experience. He was going to give him 20%. He was going to manage and then we were just going to get rich off the sixplex. And about a year later, I don't think we made any money. He decided to quit. He says, I fired him, but it happened on the same day, so it doesn't matter. He had to get released. I took over the management of a sixplex, and arguably the worst part of Pensacola, that at the time I think only had like 2 tenants, only one who kind of paid. And I had to take over management, which is not something that I would call very good, and renovations on a very low-end property. And so piecemealed a very shoddy renovation to kind of get this thing back up to snuff, put up a open house. The only open house guest I had was the local neighborhood prostitute, who was a little high on whatever she was taking, who left to do a trick and then tried to come back. And I told her she wasn't invited back. And that was kind of like a huge slap in the face to realize, again, in real estate, maybe I'm not as smart as I think I was, and I got to figure out a better way. So thankfully, during that process, I was also starting the syndication route. We'd already syndicated our first deal, and we were getting ready to buy a 60-unit apartment complex with partners. And so I put that thing on Craigslist and sold it, I don't know, maybe a week and a half later, and I only lost a couple $1,000s, which in time saved versus money that was going to possibly be made was totally a good deal. And I got out of it, right? And so for me, that became very clear, like, hey, I'd rather buy stuff with other people that can help me versus me get 100% of nothing. And so that was a pretty good deal. Now, I will say, too, that property came back to me 2 years later. The guy I sold it to got sick, / a couple DUIs, and had to basically start turning over all his properties because he couldn't manage them anymore. So I got quit claimed that property back. And I was smarter the second time. I brought in a partner 50-50, and I told the partner, who's a young guy trying to get started, I said, listen, if I never go back to this property ever again, I don't want to step my foot on it. I'll give you 50% of this deal if you'll just manage it for me. So we did. We were able to sell it and actually made quite a bit of money this year, once again, because I partnered more correctly. So that was a great example of how not to do.
Hey, David, and completely unrelated to this, I just want to make sure that we know in the future we should get guests that are good at investing.
No, we shouldn't.
But you know what?
We should get guests that are honest.
Okay, Jesus, sarcasm meter. Goodness gracious.
No, you're always serious.
So, yeah.
Everybody wants to know when I made money. That's boring.
But hang on. Because this is something that I try to talk to people about. They partnering on small deals. And I say, look, be very careful, right? It's like, when you get married, it's like you get married for life, and you get married to do a lot of stuff together. Have kids, raise kids, do life projects, whatever. And so it makes sense. Like, you're not going to always get along, but it's like, look, we got big plans we're supposed to be doing together. But when you get married to somebody for $100 a month deal, man, there's just not that much on the line, but there's a lot that can go wrong. And it's like, some people don't care about their credit score. And some people don't care about the income. And some people will just let it go. And you end up doing 100% of the work. You carry 100% of the stress to split $50 or to split $100. And then, it's not that easy to undo this stuff. These are 30-year mortgages, depending on how you do it. So I love the idea of partnerships, and I'd love to hear your insight on this, but I love the idea of partnerships, but I don't love the idea of partnerships on small deals. So 4 or 5 units less, it's just like, it's a lot of stress for not that much reward, even if it goes well, and the potential for it to not go well is high.
Yeah, 100%. And if you're going to partner with people, I think you have to have a true partnership, right? The first way I tried to structure that was kind of just like throwing a bone so the guy would manage the deal for me, but it wasn't a big enough bone. So when things inevitably started going poorly in a bad part of town with 2 people who are not really, equipped or desired to go scrape together the time and effort to make that thing work, the easier option for him, and really for me too, if I was in the same spot, was just walking away. So the second time, though, when the partner has a 50-50, he's young, he doesn't have a ton of money, and he's willing to hustle and work, he would have made a crap ton of money off that deal. So there's something to say who, and there's also something to say how, I think, for partnerships for sure.
So that's a good segue into this question. And I've made this mistake, not grossly, but I made it on my first multifamily, where I wish now, looking back, that I had my property manager as a part owner of the complex for that same reason. You're like, that guy's going to be there every day dealing with tenants and dealing with, it's like, he should care about it more. He should care about it more than just like he says he cares for the 10%. It's like, yeah, I need to get good people in there because this is my building too, a little bit. Is that something you've done with the bigger properties?
I've fired so many property management companies over the last few years that I feel like that's maybe more my superpower than anything else. And so, no, I do not have, well, that's not fair. So I have multiple different property management setups across all of my properties in different areas. But for my big stuff, 40 units plus, my property managers are just property managers. And I recognize them as a commodity that I need to take care of, and that if they're working well, I want to make sure it's always working well. But I always am looking at other opportunities for property management, because not to say that the person will go bad, but the person may have to take another job. The company may restructure things. I've seen all kinds of stuff. And so right now I'm very, very happy with my property management, but you've always got to have in the back of your head, what happens if, they go bad, right? For my smaller stuff and for some of my mobile home parks, we're actually starting to build property management in-house. And one of the ways we are incentivizing our property managers is to give them some ownership, since we don't have a full brokerage. By them being an owner on the property, they can legally manage it here in Florida. And then I also have, again, a little bit more skin in the game. And it's not a ton of skin, but just trying to get things started. Hey, we're going to pay you your fair rate, but we're also going to give you a little bit of percent of ownership. We want you to have a different mindset on this stuff. And I assume over time that will probably grow as they continue to provide more and more value for us too.
I love that. Yeah, incentivizing.
Property manager is she's just a property manager, right? She doesn't have any ownership. She doesn't really want any ownership. She wants to get paid, and that's it. So
yeah, because the same thing happens, right? If you get a property manager who manages a property that they don't like, and they have no incentive other than the 10%, it's like eventually the 10% is not going to be worth it, and they're going to walk. Or worse, they're going to quit while still taking a paycheck. They quit while the old saying, like, people quit 6 months before they quit. You ever heard that? So the idea is the same. It's like, she's going to work every day, collect that paycheck, but mentally, and I don't, he or she, whatever, like mentally people quit jobs a lot long before they actually put their notice in. And so, yeah, if you have somebody who's incentivized poorly and then they don't like it, it's like, dude, they don't care, and it's going to show. And then you're going to be in this battle. Like, who do they quit first, or do you fire them first? Mm-hmm. And then it's like chicken.
It doesn't matter, because you're losing money either way.
Yeah, it's chicken. Yeah, it's like, ugh. And then, yeah. And you make a really good point. Something that goes really, for beginners, they get very disillusioned, or I should say misguided, by this idea that you have to create this perfect team, especially when you're investing out of state. And I'm lucky in that I talk about my property manager, my contractor, like, they're my godsend, right? And I'm very lucky, but I also know that people go, I hate to say it this way, people go bad. You have a great contractor, it's like, yeah, but not forever. People change, they get other jobs, they grow. It's like, I got a 30-year note on this, but my property manager may or may not be here for 30 years. Mm-hmm. Odds are, and like you said, just because the company stays the same doesn't mean that the person who's working there doesn't change. And it's like, yeah, I really liked Tommy. Well, Tommy's gone. The company's the same, but Tommy's the one that was the glue. And so, yeah, things change. You got to be able to adapt. You got to have somebody waiting in the lurch.
And I say same thing goes for owners, right? I think an owner can be really great for a property management company. And then when their lifestyle changes or their situation changes, and all of a sudden they have to go from, keeping this property as up to date as possible to sucking every, possible morsel of cash out of it, that becomes really painful too. So, I think for me, I try to be what I consider a good owner, which I think means you got to be able to spend some money to fix your property when it needs to. You got to communicate. But I also think that part of that means now, as I've learned this, is I've got to be way more involved in the process. Maybe not the day-to-day, but I need to understand the process, and I need to be on top of that and making sure I understand what's going on. No communication is typically a pretty sure sign for me that nothing's really happening. So if you got something good going on, you typically want to tell somebody, right? So if you're not talking to me, I typically get a little bit scared about, well, why? What's happening? So and I'm sure there's some personality types that would argue the other way, but they haven't worked with, our management style here. So yeah, I think everybody can go bad.
I like that. Yeah. Be a good owner and you'll get good people.
Yeah. 100%.
I'm very rarely am I shy to throw money at my properties. It's like, oh, I can't afford that. It's like, I can't afford not to afford it. So throw the money at it first, and then you'll get better tenants. You'll get better management. The management doesn't want to go to a tenant and be like, yeah, we know you want that fixed, but the owner doesn't want it. And now you put them in a position where they're not, like, as we talked about, like I just said, like, they're not happy because they're like stuck between a fussy customer and a fussy owner. Mm-hmm. And it doesn't do them any service. It's like, no, do what you have to do first. And then odds are it'll work out in your favor. Although it's a little bit counterintuitive, because if you suck all the cash out and you're tight on the deal starts falling apart. The tenants get less happy. It's a downward cycle.
100%.
Alex and I were talking. I think we were both in the same forum not too long ago. I don't know if we ever talked about this, but I've seen you say it before, and I know I say it all the time. Where like people will be in like Bigger Pockets forum saying, griping about like $50 from a tenant or something, and it's like I always just comment like, look, dude, if $50 is worth as like this much stress, pain, misery in your life, like you've got a bigger problem with your business, and we need to talk about like that. Like same thing. Like I don't just throw money at my properties all the time, but at the end of the day, like my property manager calls and says, "Hey, we need to do this." I'm like, "Okay, cool,
Yeah.
thanks."
Whatever. Property management is tough, right? And for small multifamilies, below 60 to 80 units, the financials are always really, really tough to find the right people, and you've got to kind of just win, right? You just got to find the winner. That's tough. We have been really successful in finding a larger property management company that was able to come into a 60-unit property, and now is managing some of our other stuff too. And we were able to do that because the property management company really liked us, right? Me and my partner, came in. We were very clear on what we were looking for. We weren't playing games. We signed things quickly. We turned things around fast. And when something needed to get fixed, we got it fixed, right? And so I've watched that same property management company turn down a whole bunch of other people in the market with similar type properties because they just didn't want to deal with the person. And so, I think that's, it's
be a good person.
Time. It's who you know, not what you know, right?
Just be a good person.
Be a good dude. Be a good dude. So.
I think people get scared of spending money, right? They see it leave out and they don't see that it's, they get scared of it. So they get tight. And then not to say you want to be frivolous with the money, but it's like, it's almost better to throw too much money at something than be so tight that, it's like, oh, I don't want to fix that water leak. It's like, dude, this is not helping anybody, and it's going to cost more. It's going to, it comes back to this idea of like, pay attention to your problem, like fix those problems up front. Mm-hmm. Because stuff grows and in real estate, stuff grows like you wouldn't believe. It's like this. I learned a while ago. I used to try to fix water heaters. I'd go try to fix it. Go try to save that AC. It's like, just write the big check today, right away. Mm-hmm. Don't try to hobble it along. It's going to cost you more. The tenant's not happy. The property manager's going to deal with it a bunch of times. Just
let me flip the script. So we're all landlords here, right? Mm-hmm. So what is your initial reaction to a tenant or a potential tenant who sees your listing for a place to rent or whatever, and you've got it listed for $1,000, and they're immediately like, "Will you take 800? How about 850? Let me negotiate this down. Let me talk about this. What about this? Well, what about this?" And they nitpick, and they're cheap, right? Like there's a piece for frugality, but for me, if the first question out of someone's mouth is about how much less I'm willing to take for rent, and then a bunch of other questions about what I'm willing to do for them, while they're also asking how much less I'm willing to take for rent, I will immediately write them off and say, not someone I want to deal with. And I'm sure it's the exact same for a property manager when a landlord's like, "Hey, I see you take 10%. I've done no deals. Will you take 8? Well, what about 7? What about, well, okay, but I also want you to do this, 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 and this, which I didn't see that you listed, but how about not?" And it's like, for me, it's a forbearing sign of, that's the wrong word, but a sign like, at some point, something's going to bubble up. And it's not going to be someone I want to deal with.
Yeah. So I will say I don't deal with any of the tenant interactions for filling units. That's just not my specialty. So I always have a property manager buffer between that. But I'll say yes for a tenant, that would be a huge red flag. But that's also a huge red flag for me for partners, and that's also a huge red flag for me for investors. And so when somebody starts coming in asking for things for better deals when they haven't even done the deal yet, it's like, no, like I'd rather just not work with you at all than try to make this work, and not to say to be taken advantage of, but I see it a lot of times. Hey, I'm brand new in multifamily. I haven't never done a deal. Will you come buy a deal with me? Like, hey man, why? What are you providing me that like makes me want to even get up this morning and talk to you? But I think people maybe sometimes over ask initially of partners and investors too.
The more I get into,
to your point, I think it also depends on the market. So if somebody comes to me and says, "Hey, I want to rent your $1,050 or $1,000 a month rental for $800," and I'm like, "Dude, I got a waiting list at 1,000 already." I mean, the goal now is to take. If you look at customers as a bell curve, from F being the worst customer that pays the least profit and complains the most, to the A customer, that complains the least and pays the most profit, right? Like I'm going to go find the closest to an A customer I can for that 1,000. The 1,000's set. I got a waiting list. I don't need to take 800 and you're going to be a pain. Like that's just not. So there is a difference between, I like what you said, flip the script. Like I like your idea here where it is more intricate than just like, hey, throw money at it. Don't worry about it. It's got to be like Jeremy says, like there has to be a reasonable return of value for each party. Like I have to, like, I'm not going to go and do your deal. That's what that person's really asking. Hey, Jeremy, come do my deal for me. And I'm going to take credit and, I'll give you $500, right? So yeah, I mean, it's definitely more intricate than that.
The more I get into real estate, the more I try to filter things through the lens of like, okay, I'm going to earn $1. How do I earn that dollar with the least amount of stress in my life? Like, that's like what you said, closest to the A, like where is the, because if you go too far and to the right, like the guy might be willing to pay you $1,100, but he expects you to like have fucking caviar at his house every morning when he wakes up. It's like, look, I want the guy who's going to leave me the hell alone, pay on the first, and leave my place looking just like it was when I left. Like, I know that's not always as easy as it sounds, but even in deals, right? Like you could offer me the best return in the world, but if I'm doing all the work and I don't want to do all the work, like, but anyway, so yeah, the how can I earn that dollar with the least amount of stress in my life?
That transcends that customer transcends to all, how do I say it? Industries too. So Jeremy, you'll appreciate this. You have people who give you money for deals that are F customers.
Well,
right. And you're like, oh, you helped me raise money. I don't want to take your money again because you're so hard to deal with, even though I'm sure you have those.
Well, so I try not to take those people in the first place, right?
But they exist is my point.
They do exist. And it's not necessarily fair to call all these guys F customers, but generally across all of my deals, but listen, because I'm working with better people, right? I'm not working with terrible, but across all of my deals, there's always typically whoever gives me the least amount of money in the deal is almost guaranteed to cause me the most amount of friction or stress at some point during the deal, and it's almost always an issue of they have the least amount of money, and so this is something they're trying to figure out or whatever, and it just the stress of it causes all kinds of problems that are outsized to their investment. So the guy who's stroking the $250,000 check doesn't call, doesn't care, is very happy with what's going on. The guy who writes the $25,000 check, though, is like, hey, man, I don't understand why this isn't happening. And you're like, hey, man, there's a lot of reasons why. Don't worry about it, right? So, yeah.
That's so true.
Yeah.
100%.
That's the nature of it. But because the guy who wrote the $25,000 check is writing a big percentage of his net worth to you. And the guy who wrote the $250,000 check is probably not writing that much of a percentage of his net worth to you. And so the stress levels of it's like, oh, you messed that up, Jeremy. It's like, we'll be all right. And the other guy's like, dude, that's all my 25 grand. Like, you can't make any mistakes. And not to say that that's a valid argument, but that is probably what's happening in the backside.
And 100%, I'm trying. Not only am I trying, it's legally per SEC rules, I'm not going to take your last 25 grand, right? That is not an investor that I can work with, right? And so one of the things I really try to screen for is, hey, do you have some money? Have you had a little bit of success? Because if you have nothing and then you're trying to invest with me, my returns aren't going to be tomorrow, right? And it's like playing the stock market again. And you're trying to like sit there and watch something that you can't watch because there's nothing to see. Investors are fun, right? They're your number one partner, right? When things are working out well, and they're literally the number one reason you can't sleep at night when things aren't going well. And so it is leverage to the core, right? And I think all of my success is based on leverage. I keep talking about all the deals that haven't gone well, but I've also had deals that have gone very, very well, right? And so it's because I've partnered well, I've leveraged well, time, effort, people, and man, I'm just me, right? I'm a nobody, but things can go well when you work with the right people at the right time. So
you're not a nobody.
I love that because
your most recent deal is awesome looking.
Yeah. Well, that's the other thing too, right? I don't market for. I don't. This is probably I shouldn't say it out loud, but I don't go actively look for deals. My deals at this point are kind of finding me, right? So I've created very much a niche in the kind of the market that I'm in, and I have brokers that bring me stuff. Say, hey, is this something that you're interested in? And I say yes or no, right? And so that's worked out very, very well. I don't think that's something that's repeatable, and I don't think it's something that's necessarily sustainable over the long term. But currently, in the situation I'm at, it's worked out really well the last couple of years.
Hey, if you ever need video production for some of your deals to help raise capital, I know a great guy. I know a guy who can really knock that out of the park. I mean, he's incredibly expensive, but it's worth it, right?
Yes. So, it's funny though, right? Me and Alex have been talking about how to do deals, how to do video. My investors, so the last investor webinar I did, had about 50 people. I think I checked on YouTube the other day. It had 109 people actually ended up watching it after we did it live. So I probably had, 100 plus people watch this webinar. The number one question I got over and over and over again was on insurance, right? So all of my investors, it seemed like they believed the deal, right? The upside was sold. I had very few pictures of the property. The upside of how they were going to get there seemed clear enough, I guess. All of my investors really care about is how are you going to insure this property so something bad happens, we don't lose a lot of money. And so I found it interesting that when it came to sales psychology for an investor, I think if you focus more on it's that loss, everybody's worried about the loss, but not as focused on the gain. And so if you can just sell, hey, you're not going to lose, right? I think that's way more important than I realized kind of before I got started in this process a couple of times. And so again, right, the glitzy, the cool stuff, right, I really wanted to do, but I also realized that's not what's selling to the investor, right? And so it's like, I should just start a PowerPoint on how insurance works and how I have a bunch of it and we're going to be okay. And everybody would just be like, oh, it's the money, right? So
I think that's market cycle piece too. I mean, the timing of you bringing this deal, that's everybody's concern right now is that the sky is going to fall out.
Right.
So I will say, you showed us your webinar before you went live, just ran through it so we could, critique. And you had, the deal looked solid enough that I was sitting there like, do I have money laying around to invest? I don't know. Like, it was a good looking deal, right?
Yeah.
And
talk about your F customer. Oh, you don't want David. Jesus.
I was just going to go on social media every day and be like, look at this deal I'm doing, everybody. Look at this. Call me.
I've seen that before.
Preservation of capital, though. I like that you've recognized that. I think David's probably right that some of that is the market cycle. But preservation of capital is so important. And, coming from a banking perspective, it's like, that is it, right? We don't care. Banks are starting with like, first, don't lose our money. Like,
banking perspective. I'm talking from I lose money perspective.
Well, I just mean it trickles into that. That's not I just mean I recognize that mindset. It's not just investors, right? It's
Smart.
Preservation of capital on bigger deals is far more important than the glamour. Oh, you earned 11%. It's like, well, I'm giving you $500,000. I want to make sure that it's a positive number more than I care that it's 11%. I really don't want it to be negative at all.
Yeah.
A lot harder to come back from losing money than it is to just make less.
Yeah, and people don't think that way, right? Like, people don't realize which is funny. I tell people all the time, like, the sexy thing to do is jack up your income and make more money and whatever. But like, the most important thing to do is to cut expenses and mitigate loss. And as Alex always says, avoid the risk of ruin. Like, don't ever take a risk that can destroy you, right? And people don't. It doesn't sound sexy to say that. So people don't, nobody's rolling around in their Lamborghini doing a video talking about how much money they didn't lose. They're rolling around talking about how much money they made, but that's all well and good. But one loss can,
Also, doesn't it matter it matters where the person is in their investing cycle. Jesus, this thing is pissing me off. Sorry, my video.
Yeah, you said you know a good videographer?
Yeah.
You should partner with that person.
Okay. Oh, he got me. Okay. All right, I hate you. But when you're brand new, right, and you don't have that much, and you're usually buying a lot of debt to get this thing rolling, you're buying a lot of risk up front, then I think when you don't have as much to lose, you're less worried about losing it, right? Because it doesn't seem that it's like, well, I'm going to roll the dice on this thing. I'm going to get this single family house. I'm going to get an 80 or 75% loan. I'm going to use my last bit of cash to start getting this thing started. And I think that's a very normal thing when you're new. You got to buy a lot of your risk up front, and it's smart because you don't have as much to lose. It's like, you can go tight on a deal. But when you have a bunch of money, you're like, look, I'm 40. I'm going to give you $500,000. I don't have another 40. Like, I have 40. Like, I can't make this back again so soon. So now I really got to hang on to it. And so I think that the risk profile shifts. When you're small and you're doing these small deals and you're new, you're like, look, dude, take all the risk up front. And then once you're like, it's the same reason why mutual funds are structured the way they are. It's like, if you're 60, don't gamble at all. I just got to make this thing hang on, and not lose to inflation. So I think it's a variety of different. You must be dealing with you got a bunch of old investors, Jeremy. No young hip kids.
No, actually, I mean, that's the funny part, right? I think your investor base, if you're trying to raise money, you really have to consider your investor base is primarily going to be a standard deviation of just a few years around your own age, right? Because it's going to be your network that you're going to start with, right? And so, yes, I have some people that are a little bit older than me, and a few people that are a little bit younger than me. But the most part, I'd say we're riding in that kind of mid-30s range that me and my partner are rocking right now. So, yeah.
All right, so we've talked about two. You mentioned there was one more that didn't go so well, and I enjoy these. So
well, so not to say that's not going.
I enjoy these because I'm not the only one. Alex always likes to give me a hard time, but I've lost money, and I think it's very valuable for people to hear that that's the reality too. And
I don't lose that much money. I'm just good.
That we've lost some money, but our net is still drastically up because little punches.
Well, and I would argue, right, like losing money is a strange conundrum, right? Because it's not necessarily lost until it's done, right? So I've never lost money on a real estate deal. I've had lots of real estate deals not produce what I expect, but I've also had a lot of real estate deals, over a grand slam over what I've expected too. So other deal we did, 42 unit. We bought with some partners. The original setup was that my partner and I were going to kind of come in and bring some money, bring some experience, and bring some investors so the deal could get closed. Most all of the problems I blame myself on. I didn't really do any of the due diligence. I kind of assumed and relied on the other guys to do that. We didn't have any kind of actual structure for the partnership of the four of us as the sponsors. We definitely didn't know the market nearly as well as we thought we had, and didn't have all of the construction worked out before we got started. And so on that deal, we bought it. About a year later, realized we were going the wrong direction, right? We should have, multiple units up. We only had 17 of the 42. And I think when we bought it, there was still like 20 something. We had a whole bunch of loan proceeds that if they weren't going to be used within the next month or two, we're going to just go away. And so we had some cash available, but if we didn't spend it quickly, we weren't going to have any cash left. And we were making no money. We were losing pretty significant month over month. And so unfortunately on that one, I kind of stepped back in and said, hey, it's time for me to take over. And part of that was probably just my own hubris. A part of that was we just needed somebody of the four of us to say, hey, I'm the chief, you guys are the Indians. One person needs to speak for us because we have multiple, it's not going to work. And so step back over in that one. And since then, right, I've been having to do kind of day to day, which was never my intention, right? This was always supposed to be kind of an easy deal. I was just going to sit back and hang out on. And so now I'm doing the work, but there's no compensation for that, right? Which kind of sucks. And so that was very frustrating. But the nice part about that was being forced to do that, putting my nose to the grindstone 2 years ago, right? I now have to know how to run this deal, right? And so I feel very confident in being an operator and running a construction project. And now I've brought this deal back from basically the dead to where it's making, a ridiculous amount of money every month, with still more to go. And now the questions are not like, how do we pay the bills? It's like, do we keep building up these units and try to make it worth even more, or do we take a bunch of cash right now, right? So they're much better problems to have. But another great example of like, you got to be careful with the partnership, right? So we thought the partnership was going to kind of work just naturally and smooth. No partnership moves naturally and smooth. And so when things fell apart, you better be ready to step up, right? And pick who's going to do what and make that very clear very, very early. And so that one kind of sucks.
Do you think that happens often? Where some partners in a deal just, I don't want to say give up, but just stop holding up their end of the bargain, and then somebody else unexpectedly has to go and run a deal that they.
Does it happen? Yes, I know it happens because I've talked to other. When this happened, I kind of reached out to a bunch of other guys I knew that were a little bit ahead of me, had done similar stuff. Now, I would argue in this deal, the failure was across the board, right? All of us kind of screwed this up because we weren't delineated. And so it's tough to say it was somebody else's fault if they didn't feel like they had the opportunity to make those decisions, right? So there was definitely some like, well, am I the decision maker, right? Or I'm the decision allower, or where do I fall out in that? But the buddy I talked to was syndicating a deal with a guy who's kind of been set up through a group, and the other guy was stealing money, right? And, committing fraud. He caught him. He got him off all of the accounts. and then went to the lawyer and said, hey, what can I do? And the lawyer said, well, you can do this. And you can take this guy to jail and you can get you probably get prosecuted and sue him for all this stuff. But the problem there is that you're now doing this all with your investors' money. And it ended up being more expensive, right, for him to go get the justice that was deserved rather than him taking over the deal, continuing to operate the deal, turning it around, making it a positive cash flow and selling it for more, and then having to pay the guy who committed the fraud because he still was in the same ownership percentage. That was still cheaper, right, than going after and solving the problem. And so structure matters, who you work with matters. And I think you've got to consider from day one, I think I also talked about it, day one, you have to consider about how's this thing going to fall apart, right? And when you understand how it can fall apart and you've already kind of shaped things, I think that's a lot better. So my partner and I right now, we're going through and getting, life insurance on each other. We restructured things. So if, something forbid would happen to both of us or one of us, our spouses and our investors would not be completely sunk. Because bad things happen to good people. Coronavirus gets people, right? People get in car wrecks all the time. Even people get just distracted with other good deals, right? So this was a good deal, but this is an even better deal, right? So how are you going to focus on this okay deal that's a little bit smaller when you have this really awesome deal? And so disinterest is something you have to consider too. And so I think all those things come into play. And it's been a super learning experience. I feel like that deal, specifically the 42 unit, has been really good to kind of give me the confidence that I can do this if I need to, but also give me the confidence that if you come to me and say, hey, I want to partner with you, my response is, okay, what does that mean? And we're gonna cut that very close to what that means. Because if it means I'm never taking over, I'm going to be compensated. If I'm going to have to take the day-to-day and drive into the property and deal with the problems. And, I was writing checks out of my own personal account to keep the deal alive for a while, right? That sucks. And so if I'm doing that kind of level of taking the ownership of the deal, I hope to be compensated better for it. So, yeah.
All right. Grand Slam time. We can't
No, I want to ask one more question.
Oh, all right. I'm sorry.
One more. We can go quick though. But it's a tendency, I think, for new people, I say that loosely, to get petty. And I don't think they think about it as petty, but it's like justice, right? Hey, that guy did something wrong. He should get justice. And it's like, that feels right, but that's very rarely the right approach. Most of the time I find you just have to let things go, worry about your life and keep it moving. And so frustrating as it is to have to pay the criminal, the fraudulent ding dong, that was the overall right position, even though you had to swallow a lot of that, that natural desire to be like, hey dude, I'm going to kick the shit out of you. You did wrong. Like that's the desire. So I just wanted to emphasize that point. Like you did the right thing because, moving forward, looking forward is the way to go. Looking backwards, you spend a lifetime trying to right all the wrongs that people have done to you. And it doesn't necessarily make things better for you or anybody else.
Nope. And, I think if you see your life in a timeline, right? All these problems that we see, they overwhelm us for a short amount of time. But now, looking back years later, it's like, oh, that was a bump, right? I learned a bunch of stuff, right? And I think perspective, I guess, would be my answer there. It really helps to kind of see the big picture and not get lost in the day-to-day.
I agree. All right. I bugged you about all your crappy deals.
Yep.
And I say all your crappy deals like it's like this huge amount. They're all really, as far as crappy deals go, it sounds like they're more just stressful deals than crappy deals. But Grand Slam time. Tell us about a good one.
All right. So the one that I will always be searching for again would be that fourplex in San Diego. But my favorite one I like to talk about is my partner and I bought a office building, 8,000 square foot office building, not too far from where both of us lived in 2016. We quite honestly didn't exactly know what we were doing, but I don't think you always have to know what you're doing. You just have to get started. So got started. We were able to take a 8,000 square foot office building, re-tenant most of the offices, able to add a few little things to kind of fix some of the expense drain, right? Changing out some contracts. We put in our favorite story to tell now is we put in a Wi-Fi thermostat. So we were able to change the temperature from my partner's phone at night. So it wasn't just always running, just burning up the electricity. So help the utilities. And we took a 8,000 square foot building and we had to sell it in 16 months because our plan was to own it for a 5-year time and get to basically $1 million valuation. We thought we could go from $800,000 up to $1 million. Everybody's going to make a bunch of money. We're going to walk away. Well, we sold it just over the 16-month mark and our investors made about 126% on that one deal. And so, buying right could definitely make you a bunch of money. So that was like a 500% return for me.
So when you say, so you guys say the sales price, what you guys?
Oh, it was 1.2 million.
Man,
So,
yeah. So you overshot your 5-year goal by essentially double.
Right.
Yeah.
And awesome. By the way, we also paid cash flow throughout that entire deal too, right? It cash flowed pretty much the entire time. So that was a pretty good deal. And that was like the first deal we syndicated. And so we will forever be kind of chasing back for those kind of numbers, I guess. But those are, I don't think, similar deal with my deal in California, right? I made over 100% return on the purchase price, but I only put $27,000 down on it. So my return on that deal was, thousands of percent. I will always be searching for that deal. My kicker and my answer to everyone that asks, though, is if you don't play the game, you can never hit a grand slam, right? I'm always looking to hit a single, but if you're not playing the game, you don't get the opportunity to hit the grand slam. And so grand slams are nice. They help.
Was it Babe Ruth? Maybe not Babe Ruth. I don't know. One of the famous, home run hitters. People are like, whoa, how do you do it? He's like, I just try to hit the ball. Like, yeah. I mean, that's, people hear me joke all the time. I'm like, yeah, solid base hit. And they like, people take it as like an insult when I'm like, yeah, solid base hit when they tell me about a deal. I'm like, no, like I have gone for the fences on deals that did not work out the way they should have. And for me, like a solid base hit with no stress, it's just easy. Like down the road, that'll be a good deal, right? Like I'm totally cool with base hits all day, but ultimately, like you said, if you don't swing the bat, you're never going to hit it out of the park.
And I don't know what I'm doing, right? I mean, even now, I'm buying 167 units. I'll close next week. We have a very good plan put together, but I don't feel like I have some secret sauce on how this is magically going to turn around. It's like, hey, no, this is a pretty solid base hit. Work with the same people, doing the same thing we did in the last deal. It's getting a little bit bigger. I don't know. It's just play the game. I think for anybody that's listening to this, if guys like us can do this, you can do it too, right? It's not rocket surgery.
Yeah, you can definitely do it if Jeremy can do it, obviously.
100%.
Yeah, definitely. It sounds like I've definitely never heard Alex online say, something like real estate's easy. I can do it. That's not
my tagline for the veteran REI thing. They're like, you need a slogan. I'm like, real estate's so easy. Any idiot can do it. I'm proof.
Yeah, I love it. It's true though. Like people,
I say to be a jerk, but it's good, Jeremy. I appreciate you coming in and showing like the goods and the bads, because it's like, people, you will lose money along the way, even if you net positive. So people have to come in and think, yeah, you can make money at this. You're going to lose money along the way. You're going to drop coins and thousands along the way. I got to rip me off for $500 a couple weeks ago. I think you got another one's going to rip me off for $1,500. It's like, okay, but I'm going to make 20 grand on the project overall. I could have made 23, whatever. But that's just the nature of it. So you're like, dude, don't trip over a penny. Don't trip over $1 to pick up a penny, that kind of thing. And it's good to show like, hey, look, there are going to be stresses. It's not going to go slick, right? It's going to be tricky and difficult. And then when you look back on it, you're like, oh, that wasn't so bad. Like you said, it wasn't so bad. I learned a bunch of stuff. I'm better now. Mm-hmm. And God forbid, my thing is, God forbid you won too easy too soon. Then you'd be cocky and you might gamble it all away one day. That's why lottery winners go broke.
People don't ever think of like real estate this way, right? Because they don't think of real estate and stocks in the same vein, right? But if you were to graph owning a rental, just a normal rental property, right? You were to graph it. It's just like the stock market in a way that if you zoom in, it looks like this. But as soon as you zoom out over the course of 70, 80 years, there's volatility there, but it trends upward. Like owning a rental property, I had a guy die in one of my units last year, and he decided to die. The furnace blew up at the same time. He didn't have any family, so when he decided to die, he rotted for like 3 weeks, and it was like a 60. I think it was like right around a $6,000 month from one guy, and the guy was paying $480 a month, right, in rent. So he took an entire 14, 15 months of his rent with him when he passed away, which is super unfortunate, right? Like bad situation, had storage unit involved, had to store all this stuff, whatever. And so that's one of those whatever, but over the course of the years still made, money. I don't know. So it's easy to see like people think like real estate, yeah, cash flows. Yeah, but maybe not every month,
Right.
I mean, I don't know.
Yep.
Yeah, you got to have a little bit of it makes you get a little bit of, what it does when you look at when you look at problems on a big time scale, Jeremy said it perfect. You look back on it, you're like, that was a big deal in the day of, I was stressed out. But after on a big broad spectrum, you're like, yeah, but okay, we'll be fine, right? I'm not gonna die. And I think, to be fair, I think the military helps deal with stress. Like, my opinion of things now, like I'm not stressed until there's bullets flying ever. So I think that helps, gives us a little bit of an unfair advantage. You're like, oh, I lost a little bit of money. You're like, that's it. That's
Hey, let's go invest in Chicago.
Yeah.
Well, I not to say that there are no problems. I just mean like, if these are big responsibilities, man. Like houses are a fairly big responsibility. It's a big mortgage, and you start buying more than single family. You start buying other bigger properties, and you start bringing on other people's money. These are big responsibilities, and you're gonna have a little bit of fortitude not to go, drink yourself into a hole for 3 days because you lost $5,000. Like, get some real problems. And so the bigger problem, as you can focus on bigger problems, the small stuff starts to wash away. You're like, oh, I had a property flood. Upstairs neighbors thing flooded, and my condo, and my whole condo flooded, and I had to put a lady up in a hotel, and and then insurance gave me a big hassle, and blah blah. It's like, just write the check, fix it, and then we'll deal with it later. I don't care. The property broke even for the year because of that. It's like, oh, well, it surely could have been worse then. Goodness gracious.
And Alex's point too, right? Also, as military, how much time do we spend like doing things that we think are stupid? It doesn't make sense, but we just keep doing it, right? Like, I was told to do this, so I'm just gonna keep doing it, right? So the stick to it, right? Like, hey, we're gonna swab this deck, right? We're gonna go pick up fog. We're gonna do something that's like, we're doing this like for the 15th time for no reason. We're just gonna keep doing it, right? Real estate's a lot of the same. I think if you stick to it long enough, over time it will continue to work, right? You just do the right thing over and over and over again. You're gonna hit some hard bumps. You're gonna see some problems, but over time, it's gonna make the money.
Do you remember raking lines in the sand? Anybody else have to do that? Right? Oh, well, okay. I was in the Army, and I was an idiot, and we had to rake lines in the sand. That was like the thing in the South. I don't know. We don't have nice bases in San Diego, okay? We're in North Carolina in the middle of nowhere. And but yeah, raking lines in the sand is like you're analyzing deals. It's like you're communicating with your investors. It's like, just every day, rake those lines.
Sounds about right. All right, Jeremy, I got a few questions I always ask people. And Alex has a fourth one that he hasn't come up with yet, but he's still working on it, so we'll see. For those of you who listen, yeah. Oh man, hey, if an E1, E2 walked up to you asking you for life advice, and you had like 2 minutes, what would you tell them?
Invest in yourself. And take some risk early, right? If you're E1, E2, you can strike out and fail and start again tomorrow, and strike out and fail and start again tomorrow, and you can still do it. So do more than you think you can, and leverage as much as you can with other people.
Yeah, I love that about the military. Like, there is a safety net there. Like the video I did earlier this week with the guy who has a fourplex. Like, we talked about that. Like, not that he's going to lose everything, but if he lost everything, he's young enough that it's like, okay, next.
Yep.
Yeah. All right. Okay, cool. What is one resource, book, course, website, whatever, that you would recommend to anybody looking to get started in real estate?
So it's very dated, and I haven't read it now in a few years, but it's the one that I started with. So it's super imperfect, but it's what I used. And it's a little book called Investing in Duplexes, Triplexes, and Quads by Larry Loftus. And I read that book right after I lost all my money in the stock market, and I said, this is probably what I should have done instead. And took that idea to go find that small multifamily, rent out the rest, and basically launched me on the journey I'm on now, where hundreds of units and moving to thousands hopefully next year.
I dig that.
And you said Larry Loftus?
Yes.
I will go check that out. All right. And question numero 3. Where can people get a hold of you?
All right. So this year, my partner and I have finally partnered up, right? So we JV'd for a long time, and we have launched our own private equity real estate firm. So climbcapital.com is where you can find me, or you can email me at jeremy@climbcapital.com, and I'd be glad to help. And I'll even give you my phone number, because I don't think most people are ever going to call me, but it's 469-878-0422. And so I love helping people get started in real estate. My wife doesn't want to talk about it anymore, so be careful. I might have a lot to say if you call.
I'm texting you right now. I'm going to drunk text you tonight.
It's actually funny because we had that group text go the other day, and I meant to say, "Who is everybody?" Because I realized I don't have half y'all's phone numbers saved. So, awesome. Well, Alex, did you come up with a question?
I did not, but I gotta think about it. I fold under pressure. You know this.
I know, that's why I'm having fun with it while it lasts until your question's better than mine.
That is 100% what's gonna happen.
Yeah. Okay, I'll just tell my editor to cut off your question.
But just remember, Alex, 100% 2 weeks from now is not nearly as good as the question today.
Ooh.
Whatever. Well, okay, this is making me insecure.
Oh man, Jeremy.
That's a good question. What makes you insecure? Should ask that one.
So I did my first podcast was I had like 5 or 6 very difficult questions, but I find that it's a difficult format to ask people on the fly. And if you ask them in advance, they lie. And so asking questions like that, what makes you insecure? Talking about failure. When have you been overconfident? These kind of things, these are good questions, but they're the actual act of asking somebody those questions, you're going to get, like I said, if you ask them on the fly, you're going to get weird answers or, like answers that aren't well thought out. So they don't give you it takes a little bit of introspection to ask those questions. But if you ask them in advance, generally you get the soft answer. You don't get the real, it's hard to get people to give you real truth. So it's I'll figure something out. That's a good question though. What makes you insecure? That's a good one or a way to lead some version of it. Mm-hmm. Jeremy, what makes you insecure?
I still think there's something to be said about kind of the imposter syndrome, right? So I've done now multiple, large commercial syndications. I've raised a bunch of money. I've successfully turned a few around, and yet I still feel like when I go start looking at these deals, I'm like, do I know enough? Am I smart enough? Can I really take this risk? And so, I think it's just the imposter and feeling.
That's a very real thing.
Yeah.
It's a very real thing. So, I get it.
Yeah.
But also.
Absolutely. Yeah. Jeremy, thank you very much for joining us today. This has been fun. I'm glad we finally got to do this, and I woke up.
And I woke up.
Yes. I made it. So I appreciate it.
Yeah, guys.
Have a great day.
Thank you for listening to another episode about my journey from military to millionaire. If you liked it, be sure to visit FromMilitaryToMillionaire.com/podcast to subscribe to future podcasts. While you're there, we'd love for you to rate the show, give us a review on iTunes. Now get out there and take action.